Hi everyone, thanks for attending today's webinar about advanced FX trading strategies. We'll be kicking off the webinar within the next couple of minutes, letting the last people connect here as well. Before I continue, I'd like to confirm if you see the presentation and the presentation only and can hear me properly. Just write your answers in the questions or in the chat section, please. Can anybody please confirm if you can hear me fine? Okay, thanks guys for the confirmation. While we wait for the last people to connect, let me just go through the disclaimer quickly and then we can kick the webinar off. Contents of this material are provided by a third party, not hot forex, and are for informational purposes only and do not constitute investment advice. Hot forex and blue sky binary assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex, unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. Okay, so with this out of the way, let's kick this off. We'll be quickly going through the introduction. We'll check out the two market types that you will encounter during your daily trading activities. We will discuss a few of the blue sky forex trading strategies that we use here. These rely mainly on Bollinger Band formations. We'll go through some risk management recommendations, as always, currency trading dangers, and we'll have a Q&A in the end. So if any questions arise during the webinar, please hold them to the very end of the webinar. I'll do my best to answer them. So today's webinar is more directed to the beginners, whoever want to seek any trading tools or indicators, technical indicators to accompany their daily trading activities and decision making. Then this webinar will give you a few good ways how to utilize Bollinger Bands and the Bollinger Band formations that you will find throughout your daily trading. Now, I am one of the senior traders here in Blue Sky Forex, which is a part of Blue Sky Binary. We are an education, research, and trading group. We do provide 24-hour trade support and analysis to our followers, which will allow them to trade safer. Blue Sky Forex is representing this webinar on behalf of Hot Forex in order to educate you and help you become highly profitable currency traders. So now two market types that you will encounter during your daily trading. First is price action, aka a trending market, and the second is mean reversion, aka a ranging market. Now the price action or the trending market is commonly more powerful because the significant price movement is driven by significant news. However, it's a bit harder to identify because you really need to know what actually is driving the price, whether there is some economic news or some major player on the market is making some big trades. Now, mean reversion is definitely more common. It is a bit more easier to identify, and certainly you can always find some good trading opportunities on the ranging market as well. Our BSB core strategies, they utilize both market types, and definitely both market types can be profitable when using these formations. So, Bollinger Bands. What are Bollinger Bands? If some of you have not encountered this technical indicator before, then Bollinger Bands is essentially, maybe you see my cursor. There's a middle line here, which is the moving average. Okay, it's commonly a simple moving average, which Bollinger Bands rely on. In MetaTrader 4, you certainly can modify this as well. Now we have the upper band and we have the lower band. Okay, so these bands contain the price and contain the price movements and the volatility. We're not going to go very deep into the technical aspect or the formula that the Bollinger Bands are using. We're going to focus on the formations that appear in the chart patterns and how to utilize them. And we feel in our team that the Bollinger Bands are one of the most powerful technical indicators one can have access to, because finding and determining and identifying these formations in Bollinger Bands are relatively easy and perhaps a bit easier to identify than within other technical indicators. Okay, so it's a really easy, really good and efficient tools, especially for the beginners to use to find trading setups. Okay, so our BSB core strategy is looking for Bollinger Band formations, which you can easily visually identify based on the price action, what the price is actually doing, and the formation of the Bollinger Bands. However, just going long at the lower Bollinger Band, as you can see here, the green line, just going along here and going short at the upper Bollinger Band, which is the red line here at the top, it might work out a few times, definitely, why not? However, longer term, this approach is not really viable because it doesn't work that easily. You definitely need to incorporate price action itself, support resistance levels, like I always mention that don't forget support and resistance levels. These are really important part of your daily trading, no matter what strategy you use, whether you be a fundamental trader or a technical trader, doesn't matter. The support and resistance levels are always really important to remember. Okay, so it doesn't work consistently, going long at the bottom band and going short at the upper band. Okay. However, now the slope of the Bollinger Bands and the trajectory and the width between the bands, if these align in a certain way, they essentially present themselves as a visual formation of the bands. And identifying these formations of the bands will definitely increase the chances of making the right trading decision. Okay, so they increase the odds of you winning the trade. And today we'll be looking at the 4 primary chart formations that we have here in BSB core strategy. The very first one is channel surfer. It will be essentially a price action trade with a mean reversion entry point. Essentially, we will be trading at the beginning of the next impulse wave. If you are aware of the Elliott wave theory, you don't have to be in order to trade the BSB core formations, but knowing the Elliott wave theory will definitely be useful in understanding how the price moves in waves. Okay. The next one will be the Waterfall. It's only price action. A similar formation is a Breakout, and at last we'll be looking at the Hummingbird, which is a bearish formation. It's also price action, but with a mean reversion entry point. Okay, that's the description about Channel Surfer. I'm not going to just read it in front of you. I'll better show you. This is obviously not the very best example of a channel surfer. I'll bring up a chart, a live chart later on. We'll analyze the price movements in the past and find a couple of better channel surfer formations. But on this slide, what you will need to analyze is the directional movement of the Bollinger Band, the middle line, the upper line, and the bottom line. They need to be moving in the same direction. And then the price will be bouncing between either the upper channel, between the middle line and the upper Bollinger Band. You can see it bouncing between this channel here. So that's why we call this the channel surfer. So it like surfs the waves between the upper channel on the upwards trend, or between the bottom and the middle band on a bearish trend. Okay. So your entry point, if you have, as soon as you have identified that you're dealing with the channel surfer, then you should be seeking for entry points at the moving average, which is the middle line. On this example, I personally wait for at least 2 bounces from the moving average before I seek for a trading opportunity. But for the sake of this example, let's say that we have identified the channel surfer after the very first bounce here. Then as soon as the price reaches back the middle band, you should be seeking for trading opportunities going along with the trend. So you have the impulse wave, you have the corrective wave here, another impulse wave, another corrective wave, and you'll want to trade along with the next impulse wave here upwards. Okay, so this will be your trading opportunity. As I mentioned, we'll find a lot better examples from live charts in a bit. So fairly simple. If you look at the example, if you get your head around it, it's a really, really easy formation, and it works really efficiently. Okay. In terms of what session to trade this formation on, we would say that after London market has closed, when the markets become a bit quieter, and you have these consistent bounces on the upper or the lower channel, and the bonds are still steadily moving towards a certain direction, then it's a good time to seek for trading opportunities. Okay. So the next one is the Waterfall. This I'm sure you have heard of the term waterfall in terms of candlestick analysis. This is how a waterfall looks like. This example is depicting a relatively decent waterfall here. Okay, what a waterfall is very stable, consistent, either bullish or bearish candles with very little wicks, with stable bodies, as you can see here. So if you see this kind of formation after 5 candles approximately, if you see the price moving to the same direction, you can definitely go long here. Okay. You should not really determine a waterfall based on 3 candles only, because 3 candles is really not enough to determine decent and reliable waterfall. I would personally use at least 5 candles. And if you are planning to trade a waterfall, if you find a trading opportunity, then you should really closely pay attention to what is going on the market. What are the news being released sooner or later? Because the waterfall itself, it should be driven by significant macroeconomic news in order to carry sufficient weight to be tradable. Okay, to make sure it doesn't exhaust too quick, otherwise you might end up out of the money. You might end up hitting your stop loss instead. So also a very easy formation to identify visually. Just keep an eye out for constant and stable one directional consecutive candles with very little wicks, and check the news. If this move is driven by economic news, definitely tradable, go ahead. So breakout, also another term that most likely you have heard if you have analyzed or researched or learned a bit about candlestick analysis. Now this is where Bollinger Bands play an important role. Okay. Now, as you can see here that our Bollinger Bands, they are heavily converging. They are converging to the point where after, of course, a consolidation has happened in the price, you have an extremely choppy market in this example, and then the price consolidates. You see candles getting smaller, and boom, a breakout. Okay, again, the breakout is a strategy that should be fueled by news for it to carry weight. Otherwise, it can quickly exhaust and turn around, and this is what we call a fake out. Okay. Someone seems to have a black screen. Let me just load up the slideshow again. One moment. Okay, if anybody had a black screen now, it should be working. All right. So convergence in Bollinger Bands, the outer bands, you can see the bottom band and the top band converging to the point where the breakout happens. So what you do is you wait for one candle to close outside the bands and then trade towards the direction of the movement. Okay, make sure that significant news again is fueling the movement, and you can reap some decent profits, decent pips from one movement. Okay. Now please note that all these formations that I advise you about should be analyzed on an hourly market, ideally. You can, however, narrow down the time frame is just a little bit, perhaps for 30-minute charts, 15-minute charts in MetaTrader 4. Although I always prefer trading on 1 hour charts, analyze the chart patterns and the Bollinger Band formations on a 1 hour chart. Okay, so 1 hour is a good midway between larger time frames and smaller time frames, and then it's relatively suitable for daily trading. Okay, fairly simple again, really straightforward. Just as a conclusion, Bollinger Bands converge, price consolidates to the point, Bollinger Bands converge, and the price breaks out. And trade after the first candle has closed outside the bands. Okay? And same happens vice versa if the price breaks out downwards. Another formation is an interesting one. You see a small Twitter bird next to it as a comparison. But if you look at this type of formation in the Bollinger Bands, you see the main body, the head here, the peak of the hummingbird, and here will be the tail or the feathers. So yeah, it looks like a bird, so that is the reason we call it the hummingbird. Now this is a bearish formation, and recently what I have done is I have tried to analyze this on a 1 hour chart, and I tried to analyze this on a 15-minute chart, just to compare those two chart time frames and find the best hummingbird formations. And the truth be told, I found a bit better hummingbird formations on a 15-minute chart rather than 1 hour chart. Okay, so on this occasion I won't say that 1 hour chart is better to trade for this formation, but you can definitely analyze both time frames and look into this formation. The general idea of this formation is that if the price has rallied significantly during the day, meaning throughout the London and the US session, then after London closes, you can search for the short opportunities and near the peak. Okay, so as soon as the price reaches either the middle band, which is the moving average, or the top band, you can essentially go short and take a few hours trade downwards. In this occasion, the price is bearish when it reaches almost the moving average here. You could go short. Okay. On the 1 hour chart, I noticed that when a rally is happening during the day, then you will be seeking a trade opportunity actually the next day during the London session, because that is the time when the price reaches the far peak here, and you might look for trading opportunities. However, during the London session, quite often there are a lot of news going on, and the price can get really choppy and hit your stop loss. And this is the reason why I found 15-minute charts be a bit better in determining and then searching for these hummingbird formations, because if the price rally is happening during the day, then you would be seeking for short opportunities at the end of the day when the price is has calmed down, when the price is a bit slower, so to say. Okay, so these have been my recent observations about this hummingbird formation. Okay, before we go into risk management and recommendations, let's take a look at a live price chart and see what formations we can actually identify right now. Just before the webinar, I just took a really quick peek on this Euro USD chart, 1 hour chart. As you might know that I do love 1 hour charts, and I do like to bring my examples on Euro USD currency pair. Okay, so let's add the Bollinger Band onto the chart. For the ones who don't know how to add it, where to find it, you go to Insert at the top left, you go to Indicators, you find Trend category, and the Bollinger Bands is the second from the top. Click on that, then a window pops up with the settings that you can determine that the Bollinger Bands should use. The very standard settings would be period of 20 and the deviation of 2. In some cases, you can also put it 2.5. Sorry. This already is everyone's personal preference. Who like it to be at 2, who like to have it at 2.5. So I will put it at 2. We'll apply it to the close as per standard. Let it be dark violet, that's fine. Okay, so here we have our Bollinger Bands. Okay, as you can see, this is the current price movements. We are on the live chart. So let's scroll a bit further into the past. And already, what I checked just before the webinar, we have, this is another formation for a ranging market. Okay, and 1 second. Where did I see this? It was here somewhere really close by. Here it is. a beautiful channel surfer. You can see it starts here on the 26th of December, and see how many times it bounces and between the upper channel of the movement. Okay, we have 1, 2, 3, 4, 5, essentially 6, perhaps even 7 times. If we consider this a bounce as well, because it doesn't actually reach the middle band, but we can consider it as bounce because it comes down, we have next impulse wave. So this is a beautiful channel surfer upwards, and it ends on the 2nd of January. You can see how long this lasts, right? This is a 1-hour chart. So already after this bounce, I would have determined that we're dealing with a relatively good Bollinger channel surfer formation. Here is a beautiful bounce. I would have taken this trade here upwards for multiple entries, possibly could have traded here, but that would have been it. I would not have searched for a trading opportunity here because we already have this many bounces, and I would have determined that the next few bounces would have been weaker. Okay, and then I would have expected the price to exhaust already here somewhere. So these would have been my 2 trades perhaps, and going long. This would have definitely been a trade opportunity, a really good one, and see how the price rallies after this bounce. Okay, so a channel surfer is relatively easy to identify. We have the Bollinger Bands moving constantly upwards. Of course, we have few convergences in the bonds here, and then in some occasions the top band is moving against our direction. That doesn't matter. The general trend of the bonds is still upwards. Okay. Daniel, don't worry. I will answer your questions at the very end of the webinar. Okay. So let's take a look further into the past. Let's see if we can find any formations other than the channel surfer. The channel surfer is a good formation because it manifests quite often if you know how and where to look. Again, here we have another example of a channel surfer formation. Of course, the price does go to the top band here, but we're still seeing a relatively consistent movement downwards, consistent downwards trend. So if we consider the formation starting from here, we have one, we'll consider this big one bounce. We have 2 bounces, 3. So at this point somewhere here, I would have already searched for a trading opportunity downwards. That channel surfer is not as good as the previous one we took a look at, but still a valid one. Okay, we have a bit of a choppier market, but this is definitely a valid channel surfer, and I would definitely have taken a trade opportunity here, either in this bounce or somewhere here, and going downwards. Okay, so let's look a bit further. Okay, so here visually, if you observe, we have the Hummingbird formation. Okay, you have a serious rally during the day. If you can see at the bottom, here, it shows the time. Throughout the day, you have this significant rally. Hummingbird formation is presented. On this occasion, of course, the price jumps to the top band. This could be your entry point somewhere here. After this candle shows that we're still looking bearish, and you could have traded here and taken a benefit from this movement downwards. But please note that you would have, as this is a 1-hour chart, and you would be trading during the after the end of the London session the next day. Okay, because we're dealing with a 1-hour chart, please keep in mind. If this would be on a 15-minute chart, then you would be trading at the end of the day. Okay, so this is a decent example of the Bollinger Band formation. I'm sorry, the Hummingbird formation. Okay, let's see if we can find a good breakout. Okay, we're dealing with a fake out on this occasion. Okay, this is a very late in the evening. We're starting an Asia session here already. So this is not really the best time to trade a breakout. The breakout itself is best traded with news. And when is big news released? Usually during the London session, right? So try to keep your trading during that time if you're looking out for breakouts. This is a fake out because it's a late US session starting at the Asian session here. So not really the best time to trade this. Well, let's see further. Oh, it's getting really choppy here. Okay, so this one is during the London session, this breakout. Okay, you see the price is okay for some time. It's slowly moving up, trending upwards. As soon as the price consolidates, you have some indecision. The bonds converge heavily, and at this point, boom, you have the breakout downwards. And what a significant move afterwards, right? Throughout the late US session, you have still a decent move and a strong move downwards. A really good trade. Let's look further into the past. Again, we have another channel surfer here, starting at this point, and we have several bounces at this moment. After, I'll consider this 1, 2, 3 at the start. This fourth one would have been my trade entry. Of course, again, it's always easy to look from the price history and what you would have done. It's a lot harder to do that real time with the real and live price charts. 100% sure everybody agrees, right? So it's really good to speculate. Yes, I would have done this, I would have done that. Sure, but just for the sake of bringing some examples, this is what we need to discuss. Another channel surfer, relatively beautiful one. Would have traded somewhere here. If we consider this as a touch, then could have gone short, right? Let's see if what we're dealing here on the live market right now. It's relatively ranging, as you can see. This is a different formation. Perhaps you've heard Bollinger Bands. If you work with Bollinger Bands, then definitely you have come across a Bollinger Bands formation. This is a relatively good example of it. Most likely, if this doesn't break out, then I would most likely seek for a trading opportunity next hour, going short with my take profit somewhere here and the stop loss somewhere here to keep the risk reward ratio 1-to-1, right? That means your stop loss is the same distance as your take profit level. So yeah, somewhere here would be my trade entry, going short. Just make sure there are no news upcoming, so this ranging formation would hold, and you can take the next trade here. This is not investment advice. This is just visual observation what the price might do based on one another. BSP core formation, which we call the Bollinger Bands. So let's get back to the actual presentation. Right, let's talk about risk management recommendations. Okay. So it's really important to think about the risk reward that you're aiming for and what are your lot sizes when you trade. Okay. Before we go into this, I would like to advise you that whenever you enter the trade, you should determine your stop loss and take profit levels already and do not modify them later on. That means as soon as you initiate the trade, you don't touch the trade afterwards. You don't play with it. You don't play with the take profit and stop loss levels, because if the price moves against you, then there are certain chemicals released in your brain. Of course, depending on the lot size, depending on the risk you took with that certain trade. And if you start increasing the stop loss just to give the price a bit more playroom, not for the stop loss to be hit so soon, just hoping it would actually turn around and going in your desired direction, then you're increasing the actual risk that you apply for that certain trade. And this is dangerous, because if you play around with the stop loss and the price still goes against your desired direction, then you're just increasing your losses, right? Of course, there might be occasions when increasing the stop loss and giving it a bit more headroom to play renders a potential losing trade into a winning trade, of course, but that doesn't always happen, and your potential loss can be significantly higher than the potential wins you get by playing around with the stop loss and giving the price a bit more headroom to play, right? So always keep that in mind. As soon as you determine the take profit and stop loss levels and enter the trade, don't touch them. And stick to this rule and be really strict with this, okay? So please keep that in mind. Now, in terms of your trade sizes, it's highly recommended. On this slide, you see the percentage being 5%. Okay, so we don't suggest that any single trade opportunity your enter trade should cause you more than 5% loss of your total account equity. Okay, this is also one of the rules to remember, rules to apply. You can also use the Kelly risk management formula, which is at the bottom here in red. Okay, now in some cases the output is higher than 5%. So if it is higher for you, after you have calculated this based on this formula, then it's recommended still to keep it at maximum at 5%. Okay, so don't apply too high risk for each and every trade. If you're trading one trade per week or per month, then sure, you can work on this. But most likely, especially if you're a beginner, you want to practice as much as you can. You want to initiate as much trades as you can, just to gain knowledge and gain experience and find how different trades on different occasions, different pairs, different time zones, different sessions play out, right? So you're essentially exploring the market. In this case, initiating a lot of trades is fine, but you might want to test these out on a demo account just to see how the trade played out. If you get more serious and trade on a live account, then it's highly recommended to sufficiently analyze the trade setup before you actually enter the trade. That makes sense. Really straightforward. Okay. So Kelly risk management formula is something you can use. It composes of historical success rate, profit factor per trade, just to determine the percentage risk level. Okay, a chart calibration. If you want to trade these formations, then most likely you're using MetaTrader 4. This is the most common trading platform on the market, which brokers provide access to, their own customized versions, which already have their server files configured to connect to their servers. MetaTrader 4 provides access to 15-minute and 30-minute chart timeframes, which is good for pinpointing your trades, even 5-minute charts to actually go into very deep with close examination of the price movements. Although I prefer 1-hour charts always. This is my personal preference. I trade on 1-hour charts. I feel these giving me more information than a 15-minute or 30-minute chart timeframes. Okay. So definitely you will need 15-minute, 30-minute, 1-hour, and 4-hour charts to analyze the price movements and what's going on the market every day. Try to switch to candlestick charts. Candlesticks are a lot easier to analyze, to my mind personally, than Renko charts or any other type of charts. Candlesticks to me provide most essential information about the price movements, and these are easiest to identify to my mind. And the candlestick formations, you will definitely should study candlestick formations, because the candlesticks do provide a lot of formations only with its price and its movements. You have bearish reversal candles that indicate a possible reversal coming up, bullish reversal candle formations, etc. So candlesticks, definitely a possibility to add Bollinger Bands, because Bollinger Bands are essential for BSP core formations. Standard intervals means a period of 20 and the deviation of 2 or 2.5. You should have at least one relatively big screen for trading to adequately analyze the price movements, or 2 or 3 screens that allows you to have a good overview of different currency pairs. If you want to analyze multiple pairs simultaneously, don't of course over clutter your charts, meaning don't add too many indicators onto your chart. Okay, that is really important, because if you add too much information onto one single chart, that actually prevents you from adequately analyzing what the price itself is doing, because most of the, if not all, of the indicators they are calculated from the price movements. Okay, whether the current price movement or the previous candle price movements and values. So let me make an example. Okay, let's open up MetaTrader 4. Let's add here some additional moving averages. Put a period of 50, for example. Let's put it to yellow to differentiate from the Bollinger Bands. Let's add again here. I'm gonna add MACD. Let's add a MACD here. Okay, let's add. Okay, let's add the ATR. We're gonna add a few additional indicators. An RSI. Let's add an RSI here. So you see the space where you have the actual price movements, it's getting smaller and smaller. Okay, that already hinders your ability to analyze the price, because you're focusing a lot of these additional technical indicators that you add here. Okay, they're taking your attention away from the actual price is doing, especially if you add indicators that are drawn onto the price itself, to the same section, right? So you get the point. If you clutter your chart, it takes away your ability to analyze the price charts, and especially if you are having multiple pairs open inside the same MetaTrader 4. Let's say you have another chart here with exactly the same. Let's save a template, for example. Okay, let's save it to test. Let's save it to test. Okay, it already exists. Let's replace it. So we're loading up the same template to this chart as well. You see, the information that is provided to you is there's too much information. Let's add a third chart. So I'm sure you get the point. If you have multiple currency pairs open with the same indicators, you're not able to properly and adequately analyze all this information and find the best trading opportunities, right? It's too cluttered. Try to keep it simple. Add maybe Bollinger Bands and an RSI, or replace the RSI with the MACD. Something like that. Try to keep it simple, because the most important thing you need to analyze on the chart is the price. It's what the price does, right? Of course, the technical indicators will be of an assistance, but what's important is what the price does. Okay. So back to the calibration. Trades placed should have relatively tight stops, about 20 pips. But now this depends completely on your trading style, whether you are a scalper, whether you're a position trader trading longer term positions, reaping those higher profits of 100, 200 pips. If you're a scalper, you're aiming for these a lot of trades per day, per trading session, but aiming for maybe 20, 30 pip profits, right? So if you're a scalper, then definitely keep the stops tight, because you want to minimize your losses and you want to, of course, maximize your gains. But if you're starting out, then you should aim for a risk-reward ratio of 1-to-1, which means your take profit and stop loss are equal in terms of pips. Better yet, if your risk-reward ratio is 1-to-2, that means your stop loss is 2 times smaller than your take profit, which renders your potential gains being double than your potential losses. Okay, that sounds better, right? That sounds good if you are potentially winning more than you're potentially losing. So try to increase the risk reward ratio to the favor of take profit, to the favor of reward. Okay. Now we want to discuss very quickly about currency trading dangers, and as per standard for most of our webinars. Don't trust bots. 99% of them are scams driven by affiliate marketers, and this is true. These affiliate marketers, they know nothing about trading. They take some random technical indicators or some formulas, they put them into the same pot and say that we have a good trading bot or robot that will make you a lot of money. That is obviously not true. And this is a very common scheme, how people either pay for these indicators to be able to use them. Eventually they turn out to empty your account instead, or even they are provided free, because what they do is they empty your account and make the brokers rich, just to put it bluntly. Okay, I'm not saying that all of the brokers do that. That's of course not true. And there are a lot of very honest and really good brokers out there, like Hotforex. But if you want to test out a bot that seems really promising on paper or theoretically, then definitely try it out on demo account first. This is important. Don't attach it to a live account straight out of the bat, because you don't really know how the bot performs. If it performs well on a demo account, then do sufficient background checks from the provider of the bot or indicator or expert advisor and take it from there. If everything adds up and seems viable, then test it out, but please make sure to use low lot sizes on the live account. Okay. Now, sad but true, 5% or even less of the traders make money trading FX in long term. So that means a lot of traders will attempt, they don't do sufficient research, they lose themselves, they don't apply proper emotion control, they don't apply proper money management rules and techniques or strategies, which renders them to empty their accounts and lose, and they give up and never come back. So they don't try again. And this is the reason why this percentage is true. So very little amount of traders make money. It's totally fine if you empty account or two. That's just a lesson for you to learn. That means you need to change something, whether you need to really think about your emotion control or money management, or you just need a better strategy that you use for your everyday trading. A strategy does not essentially mean a simple combination of conditions inside certain technical indicators. No, strategy means the whole thing. It means what risk management rules you set. How do you manage your money? How do you how to say, what wavelength you design your emotion control. Okay, how do you feel when you lose? How do you feel when you win? How to control your emotions during your trading? All this, plus the actual strategy based on perhaps some indicator values or some price movements, all this results in having a strategy. Okay, so everything together, keep that in mind. And one more thing, signal services and signal rooms, and also trading communities. I wanted to talk about that a bit. Most of the signal services and signal rooms are also not legitimate, however, and unfortunately, most of these don't know how to provide proper signals. If they are designed specifically to be a signal room or to provide you with signals to trade, then it's really important to do a sufficient background check, ask for an audit trail and performance record of how their signals have performed in the past, and do research before you decide to place your live trades according to their signals. Okay. About trading communities, however, I highly recommend searching for these, participating in these, because you don't need to trade alone. You don't need to be alone on this industry to attempt to accomplish your targets and attempting to actually earn consistent income from trading. There are there are trading communities out there where already experienced traders analyze your trading, your determined and found and identified trading opportunities, if you ask, where the experienced traders are also sharing their trading ideas and what they are observing and what they are looking at. So you will get different point of views of the market and what other people are trading, just to see how different mentalities and how different pair of eyes look at the market differently and find different aspects to trading. So it's really useful to widen your knowledge about the whole industry, and perhaps you can even incorporate few others ideas into your own trading about anything, about technical strategy to use, about money management systems or strategies that others use. So definitely, I highly recommend one or two training communities work fine. Just determine what is more active, more friendly, more wise, so to say. Okay, so definitely try this out. It will boost the learning process as well. Okay, that's about it. If there are any questions that I will not be able to answer today, then don't hesitate to send them to webinars@hotforex.com, and your questions will get answered. Now, I already have a couple of questions written down here from users. Let me quickly take a look at these and then provide answers. One moment. Okay, Daniel is asking, can I use 1 hour time frame chart to trade the Bollinger Bands, and most likely its relative formations, without seeing the alignment with the higher time frames? Daniel, yes, definitely you can. And this is because whenever the Bollinger Band formation manifests itself, it would be a valid formation even if on a higher time frame the same Bollinger Band does not show the same formation. This is due to the time frame differences and then how the price is price action is manifesting on a larger time frame. So you don't necessarily need to confirm on the higher time frame, although you can do it. If I switch to a higher time frame chart, just to confirm the market condition on the larger scale, what I look out for, if trading Bollinger Band formations, then on a higher time frame chart, I don't look for Bollinger Band formation. What I look there are support and resistance level on the higher time frame scale. Okay, this is what I look out for. So this is how I confirm if we're not actually, if I want to go long in a certain Bollinger Band formation and I switch to a higher time frame, and there I see that we're about to hit a significant resistance level, then obviously that means that I will not enter the trade because it is too risky, as the price might quickly bounce off the resistance, right? So that makes sense. So yeah, higher time frame, support and resistance. This is what I analyze. I hope I answered your question. Okay. Foyz is asking, can I have a PDF for this webinar? Sorry, there is no PDF per se for this webinar, but this topic is also recorded and uploaded on the Hot4X website. After you log in, if you go to the education section, past webinars, you will find the recording of this webinar there. I think it was from one of the past webinars, so it's not specifically this one, but definitely you can watch it again and review it later on. Okay, Danny is asking, what is the standard place of entry in Bollinger Band if the study on ground? Can you please rephrase it a bit so I can actually get the question and then provide us a proper answer? And please note that we are hitting the 1 hour mark very shortly. So any question that remains unanswered, then please send it to webinars@hotforex.com. Okay, Lautaro is asking, the lower and higher bounds will be the stop loss zones with this strategy. Depends on what strategy you are referring to. If you are talking about the waterfall, for example, then, sorry, not waterfall, the channel surfing. If you're talking about the channel surfer that I specifically showed on the live chart, then if you go long here, an example over here, then sure, you can set your stop loss at the lower band here, or a bit below that, and your take profit, you can set it here definitely. Or if you're a bit more, if you have a higher risk appetite, then you can set your take profit even further if you're quite confident about the significant price movement. So this is what you can do, but definitely don't set your stop loss much further away than your take profit is in terms of pips. Okay. Jonathan is asking, what trading community would you recommend? Sorry, can't really recommend any specific ones. Although if you use Google search, then I'm 100% sure you will find some really proper ones. Just you need to actually, test them out yourself. A lot of them provide free trials if they are paid communities. A lot of them are simply free communities in the form of forums, in example. This is also something you can approach and do. Just takes a bit of time to get used to. Just read all the topics or whatever shows interest. Okay, Daniel, what is the standard place of entry in the Bollinger Band, or entry at the upper, lower, or the simple moving average? I mean, this depends on the formation that you're looking at and the formation that you want to trade, the formation that you have identified. So based on that, your entry point is different. Can be either top, lower, or middle band. As I mentioned, it depends on the formation. Okay, so this will be the last question I answer because we're running out of time. I apologize for that. Okay, Amir Hussein is asking that right now 5-minute time frame Euro USD has 4 candles upwards, while 1 hour time frame shows a short opportunity instead. What would be a good decision, or what should we do? Okay, let's take a quick look at the current charts. Let's remove all this stuff from the charts. It's really cluttering out the space. Just delete this. Average. Now let's keep the Bollinger Bands. Right. Okay, this is a 1 hour chart. Yeah, we see on the 1 hour chart we have a short opportunity. If this doesn't go any further, because might be also dealing with a upcoming breakout, as there is some convergence in the Bollinger Bands. That's fine, but I wouldn't essentially compare the 5-minute chart to the 1 hour chart, because these time frames are extremely different, right? I mean, even on the 5-minute chart, you also see the price lingering at the top Bollinger Band, which essentially means that the price is at its upper range, at least on this time frame, also on the 1 hour chart. So very likely it will go downwards or bounce off, or that the bonds will contain the price. But again, we might be dealing with the breakout formation soon on this 1 hour chart, although I'm seeing indications of a ranging market and the Bollinger bounce, right? So we just need to see what happens during the next hour here. Okay, it can go either way. Okay, but with that, we'll conclude our webinar today. Everybody, thank you for asking questions. Thanks for attending this webinar. I hope you took something with you this time, and hope to see you next week. Take care, everybody.